Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth stock analysis on DoorDash, ticker DASH. To get straight into it, we start off on a clean daily chart to see is there any gaps that need to be filled, and looking straight at it we can actually see there's a few. For example, we have one down at 115 around 80 cents. And really, actually, that is going to be the main one we're looking at. Yes, there are some other gaps. For example, here, this would be considered a gap at 201.50, but we only like to be using very obvious gaps, which anyone, whether you're looking for gaps or not, can see. And really, the only one that's shown that has not yet been filled is this 115.80. So that is something we will take into account. We usually don't trade off these, but we'll instead use them as price targets. But as you can see, now we're on the standard deviation charts, it lines up very closely to the third deviation on the 4 hour. This does give us indication that the stock may be more likely to continue down, even though we are already very oversold. And so this can instead end up being our strong bounce area. So with Dash, even though it's had a good 7% push today, it could now continue towards that statistical mean, but it is also likely for it to continue down lower. So that is one thing I would be looking out for on Dash, because we could see it continue down, and if it does, 115 will actually be that first kind of key area that we're looking at. Usually we don't buy off gap fills, but when it's that close to the third deviation, we may add some size here, and the reason for that is it may fill that gap and bounce before actually touching the third deviation. But if it does continue that bit lower, around 112.50 will be where we expect to see that bounce, and at a very extreme, if we continue that bit further down, we would expect to hit the daily third deviation, which would be at around $103. So this is kind of our buy zone target. But as you can see, we are already below the second deviation on the 4 hour and kind of just close a little bit above the second deviation on the daily. So either way, we are still in a very oversold area, and at an area where we would expect to see the stock continue upwards. So if you're looking at it from more of an investment standpoint, it's still not a bad area to be buying up. But as we can see, roughly we are at $137. We would expect at a max to still see a 24% decrease all the way down to 103, which would be our kind of ultimate buy zone. But if it does continue up from its close price, our key target would be 190, as that is statistical mean, or the closest statistical mean we have, and in this case the statistical mean on the daily, which still provides a 38% upside. So taking a long now is still considered relatively low risk, because we are still getting a relatively good risk to reward. But now, what other levels should we be looking out for? 161 and 170, these are the first deviations on the 4 hour and daily. These can be areas to either move your stop, lock in profits, usually not all, but at least some, because we expect to see bounces on these levels. But overall, we still do expect that push towards statistical mean, and that's why our overall main target is around $190, because that's the first statistical mean we get to. But if you do hold any through that, then $200 will be that kind of final target, because that is the other our other statistical mean. Now, if you're looking for an investment and you may be holding even further, you can then look at further up deviations, for example 228, 218, 257, 247. And of course they go higher, but by the time we get to these levels, we would most likely have an updated video, because these levels would have changed by then. So really the only ones we're focusing on is where we are now, so the 140, the 131, and then if we continue lower, 115, 112 and 103, and the key levels we're also then looking at as an area to be locking in profits is 160, 170, 190 and 200. So that's the overall breakdown on Dash. The one thing that I do want to quickly point out is what we would expect to happen on Dash is what we saw happen on SE today, which is the analysis video we posted yesterday if you want to check that out. But we said as Dash came into that third deviation, we would expect that strong bounce, and for here we would expect it to now continue up. So basically how SE plays out, if you want to keep track of this stock, is how we would expect Dash to also play out. So I hope you enjoyed the breakdown on Dash. Hope to see you in the next one, and that's it. Peace.